Hey everyone, welcome back. Thanks again for stopping by Not Your Father's Capital. Now, in this video, we have some very important crypto macro news to share with you guys because there's going to be something coming out from the Fed next month that's going to be very pivotal to see how crypto performs, all right? So that's what I got for you in this video. You're going to want to stick around. I'll keep it short, get you guys on your way, but please absolutely smash that like button and subscribe to the channel if you have not already joined us here at Not Your Father's Capital. Now, let's get into it, guys. And I do want to preface this by saying this is not to be financial advice. Please do your own research, your own due diligence with all things crypto, all things financial. Now, what we're seeing is the Fed potentially stopping the interest rate hikes for June. Okay, now we've seen Bitcoin kind of hovering around that 26.5, 27K level, but still has not yet broken through consistently above that 30,000 psychological threshold. Okay, so this is coming out basically in a recent news conference. Jay Powell said through basically, to help ease the difficulties that we're seeing with the banking sector right here, right now, that the basic credit conditions as well as the economic growth that we are seeing in terms of momentum, that the benchmark interest rate basically would not potentially, see a growth in that rate as we speak. Okay, so this is coming out from several speeches this week where, a dovish sentiment has been seen across the board where, the Fed officials are signaling a potential rate hiking pause. All right, now we've seen, the last couple conferences at the podium, Jay Powell was very, very hawkish. Now, what this did to crypto actually was cause, I think this was more so on the heels of what we were seeing with the banks collapsing. We saw more and more regional banks falling victim to basically bad books and just not being able to put up with their assets. Now, these consequences essentially would basically be done to prevent a recession with credit tightening. Okay, so just getting into basically doing too much versus doing too little to become more balanced. That is essentially where we're in this battle with the Fed, with interest rates, with the banks, and how basically the risk reward is between recession and combating inflation. So that's where we stand in terms of the macro side of things. Okay, but now this is what we are seeing because when we relate this to crypto, all right, so now you look at the ultimate hedge against inflation, right? The digital gold, if you will. That is what Bitcoin has been since considered, as what it's been always considered and spoken about. So at that 26.5, 27,000 level, right, this is where, when we look at all-time highs of Bitcoin, we look at the macro environment that Bitcoin is currently operating in, you would think to see more of a push coming out from these digital assets, especially when all of this talk and chatter and collapsing of these regional banks, investors, institutions, their money is not being kept, basically in a safe keeping, if you will. I mean, I know it's FDIC insured, but that's not what I'm talking about. I'm talking about what they are trying to do in basically end-over-end growth. Okay, there's no growth outside of what is going on. Banks are getting killed with mortgages. They're losing money. It's going to be something that's going to be going on and on and on, I think, until we get this benchmark inflation down to where we need to be with terms of the interest rates. Okay, so furthermore, to tie it back into crypto, getting over that 30,000 threshold is going to be key for crypto. Now, when you look at what basically a softening of this interest rate stance is, that is something where, as we look to get inflation down to 2%, which ultimately Jay Powell and the Fed is wanting to do, that's not going to happen overnight. But if we have hit the top of the mountain, right, and we just continue, and there's no up from here, we continue to go down. And also, we have elections coming up. We have the Bitcoin halving. There is a lot of catalysts in 2024 where you can kind of go out with the bad, in with the new, and that is what is going to, I think, in my opinion, happen in the future, because I think if inflation does not get under control before the fall, before the end of Q4, I think you're going to see anarchy across Americans and basically globally. I think people aren't willing to wait around for another year, 2 years. They want to be making money right now. So I think that's where you're going to see crypto pick up some tailwinds in that regard, because they are making moves. I think a lot of big institutions are betting on crypto, and I think it's been a trend that we've seen over the past few months or so. JP Morgan getting into the fold. And guys, don't get it twisted. The United States are one of the largest holders of Bitcoin in the world. So that's just what I got for you guys. I hope you found some value from this article and from my thoughts on this topic. So please consider subscribing on your way out. And if you want to know more crypto news and information, we have daily updates along the way. So thanks again.